Gold is one of those assets that can make you smile today and tomorrow you will ever regret placing a trade on it. And if you've traded gold before, you already understand exactly what I mean. I remember when I first started trading, gold was that one pair I was genuinely scared of. Not because I didn't understand charts, but because gold doesn't forgive mistakes. It moves fast, it sweeps accounts, and it doesn't look back. But fast forward to today. After years of experience, losses, lessons, and wins, I can confidently say I've mastered gold. And in this video, I'm going to show you the real things I've personally noticed trading gold over the years. So pay attention, because the third point is what separates profitable traders from the frustrated ones. Now, the first one is gold is not just technical. If you are trading gold like every other pair, you're already making a mistake. Gold reacts heavily to economic news, interest rates, inflation, and global uncertainty. Anything that affects a country's economy or the currency will reflect on gold. If you are serious about trading gold, you cannot afford to be ignorant of what's happening in the world. Now, the second one you need to also take note of. Gold rewards traders who follow structure. You see, market structure is very, very important. If you don't follow the market structure, gold will punish you. Because if the market is bullish, align with it. If the market is bearish, respect it. Most traders lose money not because they can't analyze, but because they choose to go against what is already clear. The trend is not your enemy, your ego is. And now the third point, which is the most important part today, is gold respects key zones. You see gold and key zones, they are like this. Now I'm talking about order blocks, value gap. You might enter a trade, see it move in your favor, then you start getting confident. And then the market reverses and stops you out completely. Why? Because you ignored a key zone. Gold respects zones with precision. And here is what you need to understand. Every zone matters, but the strongest zones are the zones aligned with the current structure. That's where the real money is. So I'm going to show you exactly what I mean on the chart. Let's move to the chart. Okay, so let me show you guys what I mean by gold doesn't play with key zones, you know, FVG and other blocks. So I'm going to take the chart back in time to the beginning of March. So we'll view that together, because I just want us to work with the current market trend, what is happening this year, so you understand how gold reacts. We're going to start from the higher time frame. So as we've taken the chart back in time, let's do a quick, top-down analysis and take it back to our entry time frame, which is 15 minutes. Okay, so you can see gold tapped into this point, and it is pushing to the upside from here. So gold tapped in here. And one thing about reacting to an order block or fair value gap is once price taps in, you should expect the market to get to the point of reversal. So that simply means gold is reacting on this particular resistance zone here. So you can see there's the last break of structure to the upside before gold tapped into the resistance zone. So we'll now move to 4-hour time frame to start our refinement. When we get to our entry time frame, I will show you the key zones, because that is where you get your entries. If you are not a swinger or a position trader, you may not have any business with getting entries from 4-hour time frame or higher time frames. So your entries will be hiding the lower time frame. So now from 4-hour time frame, we have this break of structure here, and you can see that we've gotten a change of character from 4-hour time frame. We move to 2-hour time frame. So I'm also indirectly showing you guys how to do top-down analysis. If you follow me too well, you would know that before you start looking for entries, you need to learn how to break down the chart properly to understand what is going on. So even as we've taken the chart back in time, I'm also trying to show you guys how to do a top-down analysis. But in today's video, just pay attention to the zones we are going to find from 15 minutes time frame. Okay, now from 2-hour time frame, price is also respecting this support level here. Now we move to 1-hour time frame to get more refinement. Now from 1-hour time frame, this is what we have. You can see the last break of structure to the upside here, and we have a change of character here. We move to 30 minutes, okay, and then 15 minutes, which is our entry time frame. So I want us to pay attention, to what is happening here. Now we are looking for entries. We're just going to pay attention to zones. I'll be showing you guys the zones and how price will react. And remember, the strongest zone is actually the zone that aligns with the trend. Now the question is, from the top-down analysis we've made, what is the trend? Now price has been pushing up, but it has gotten to this resistance zone, giving us equal high. So the possibility of price getting a retracement from here is high. So that simply means the sellers may be coming in. Now the first zone I can see here, I'm just going to be mapping out the zones so you will notice. Now from this change of character, we have, this is another block here. From here, we also have another block here. We have another block here. And if you also check, we have another block here, and then a fair value gap. So since we are aligning with the trend, I'm expecting price to drop. So let's see the one that is stronger now. So I'm just going to play the charts. Let's view together on what price will do. Now you can see from this other block, price did not get to it, but what happened? Fair value gap here. So price tapped into fair value gap. So let's check the stronger one at this point. This one reacted, you can see the rejection, but then it is not strong enough, which is why price cleared it to the upside and tapped into the main fair value gap. So if you are a fair value gap trader, price would have given you a very reasonable profit here, but then other block traders will miss out. People like me, I will miss out if I was actually waiting for a sell here, but that is not an issue because we'll still get an entry. So price has dished out good move here. If this move should continue to the downside, that simply means the sellers are more dominant in the market and they are ready to drop. Because if you also check, where is gold reacting from again? There is a key zone here, which is another block. So if you are holding trades, before you rush and break even on gold, watch the structures. It is important you watch the structures, because you may just break even, price will just touch your break even and then push to the downside, or you may just rush to close and then wait for another opportunity to get it, because just this drop alone dished out 385 pips. That is a good money. That's enough money, because gold is not like other pairs that will dish out small movements. Gold dishes out the movement. This is where the money is hiding. If you really know how to trade it, you are going to make a lot of money trading gold. But if you don't know, you are going to lose a lot of money, because as gold is willing to give you, it is also willing to take a lot from you. So you need to be very smart when trading gold, which is why I'm pointing out all these key zones, so that when you are holding, you don't just hold blindly, but you need to pay attention to when it's reacting to a key zone, and when you need to run away, when you need to enter again, things like that. So let's see if this particular order block is going to push it back up, or if the sellers will drag it down, because now it is the fair value gap that is holding this sell. Now we have this order block here, we also have this order block here. Let's see how price will react. So we'll play the chart. Now you see what I'm talking about. You may have gotten this entry here and you are so happy price is moving to your direction, 300 pips. Now just this key zone here that you may be thinking is a small key zone, gold will not react there. You can see gold tapped in and still dished out 300 pips for buyers. So sellers will make money if you are quick enough to collect your profit here, while buyers will also make money if they are quick enough to collect their profit here, because we have another key zone here. So let's see if this order block will send it back down or if the buyers will proceed. So let's see. Now you see what I'm talking about? Another key zone. You may be expecting price is coming here. Price is coming here. Let's wait for it. Just pay attention to the key zones. Any key zone gold will react. That is what I've personally noticed, and that is why I'm making this video, to show you guys that when you are trading gold, you don't need to close your eyes to any key zone. Any key zone gold will react. So it's either you rush and secure your profit or lock in, because that key zone may most likely send the market against you. You know, a trade that is already moving in your favor can just send it against you, stop you out, and still move to your direction, because you can see that we are bearish because price gave us equal high here. So this FVG literally dished out a good sell if you are still holding. It literally dished out a good sell. But then these are things you need to pay attention to, which is why I stated that the strongest or the stronger zone is actually the zone that is aligning with the structure, which is why you don't need to play with the structure. So you can see after price reacted, you know, from this order block, you can see order block traders missed out from here. Fair value gap traders got an earlier entry here, but with this retracement, order block traders are in. Now this is a key zone that is against the trend. This is a key zone that is against the trend, which is to the upside. Let's see if it's going to introduce the buyers or if the sellers will still suppress it and keep moving to the downside. So let's check. We'll play the chart. Now you see the key zone. Did gold react? Yes, it reacted. Gold reacted, but then it is against the trend. But you see that reaction must happen. The question now is, will it hold? Now what will make it to hold is how strong it is. Now what makes it strong? The alignment with the structure. Alignment with the structure, that is what matters. Now you can see from the reaction, it reacted, pushed up. Now it now tapped into fair value gap. You can see from here, fair value gap, and it's dropping to the downside. So this is another entry opportunity. Structure. Remember, the three simple things I listed: pay attention to fundamentals, align with structure, and then the key zones, they matter. So from this current structure now, you can see that we've gotten a break of structure here. We've gotten a break of structure which has introduced the sellers. That simply means we should just position for sales. If the market is bearish, just be looking for how to keep selling. So there's a break of structure here. What do we have here? There is another block here which price has tapped into. I think that is the main order block here. Fair value gap traders, they've gotten an early entry from here. So let's see if order block traders will enjoy the move from there, and boom, to the downside. So key zones matter. Fair value gap, order block, don't play with it. Don't play with it. Don't play. Once you figure this out and know how to follow, you're gonna make so much money trading gold. Make sure you also apply proper risk management, because you may think this is how it will be playing out and then market will just switch. But the key zones, they are very important. Like I stated, I've been able to figure this out, and it has given me good money. It has given me good money. So if you also practice that from your own chart, you also get the same point. Now this is what we have here. There's a break of structure. Where is the key zone? So for order block traders now, this, you know, was the perfect entry, because from this break of structure, this is where the order block is, this point, or this tiny blue one here. So for continuation entry, I think the fair value gap traders will be the best point from here. The fair value gap traders from here. So is either price will drop from here from this retracement, or it will come here. And there is also another fair value gap here. So let's play the chart to see where it's going to react. So this fair value gap failed, this one failed, it just rejected a little bit, but it failed. Let's see if this one will play out. Now you see that, so it's this fair value gap here that played out. So this one was too close to the point of retracement, so you just pay attention to the one that is very close to the order block and it will drop again. Fair value gap and order block. For traders that take their entries with support and resistance level, they may be able to point this out. I don't really trade with support and resistance level, so I've not really noticed how price reacts there, but you see fair value gap and order blocks. Gold doesn't joke with those zones, it doesn't joke with it. So you need to make sure you open your eyes to all these zones when you're trading gold, and have it in mind that the one that is aligning with the structure is the strongest. Pay attention to that. So we have another breakout structure. Let me just use this one as the last example before we wrap it up. So now this breakout structure, this is the order block for the order block traders, and now this is the fair value gap. So let's see where gold is going to respect. So we'll play the chart. Let's see. So here gold reacted off the order block, so fair value gap traders, gold pierced through, now order block, and now we have another retracement. Why are we getting this retracement? The key zone that I'm talking about. Now we have a tiny breakout structure here to the upside. Anything that is happening on gold, you must see the reason. Look at this bullish order block here, which is why gold rejected from there and started pushing to the upside. So let's see if this is going to introduce buyers or if the sellers are going to come in. But you see this order block, it has dished out its move. For it to push down, the reaction has happened and it has tapped into another order block. The move has finished. This retracement now, this point is now serving as resistance zone. It is no longer serving as order block because it has been mitigated here and the move has finished. That's finished. So if you check here again, we have a breakout structure. So it's looking as if the buyers are ready to come in. We have this order block here. So let's see. This place is serving as resistance level now. So let's see if the resistance will drag it down or if the buyers are in. But have it in mind, I'm just focusing on fair value gap or order block. So let's see what price will do. We'll play the chart again. Play the chart. Now you see what happened. The order block. The buyers are in. Key zones matter. You see key zones and gold, they are like this. Don't joke. If I keep on testing this, you will see more reasons why I made that statement. Key zones and gold, they are like this. So make sure you open your eyes when trading gold. Fair value gap, order blocks, they are like this. Don't joke with it. So remember what I stated, the fundamentals, you follow the structure and then the key zones. From here you can see that market has changed structure to the upside. It was bearish here, but now it has changed structure to the upside. So as it is printing more structures, you'll be looking at the key zones it is creating and where it may likely react to, because here we have another order block where it may tap into. So have that in mind. At the end of the day, gold is not difficult, it's just misunderstood. Once you understand how it reacts to fundamentals, how to follow structure, and how to respect key zones, everything starts to make sense. And if you're at a stage where you already can analyze the chart, or your account is not growing, then it simply means you don't need more information. You need proper guidance and structure. That's exactly what I focus on in my training. So no noise, no overcomplication, just clarity, execution, and results. If that's something you're ready for, you already know what to do. Just click the link in the bio to get access to the VIP group.